Good morning, traders and investors. 4,200 handle was nice while we were up there. 4,100 handle will be nice, but we need to rally 40 to get there. Lyft down 32.5%. Well, when you see the report, you'll say they're getting everything they deserved. What a disaster. The expected move in PayPal. I guess the option traders expected that. We'll talk about that with Triple D. We'll look at earnings from Expedia. We'll see what could possibly be its strength in the market today on this week, Friday, perhaps closing on the lows for the week. David Trainer, New Construct's going to join us at 8:35 and talk about this Q4 earnings season. Mitch, fire up that intro.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Okay, welcome back, traders and investors. We're trading just off the lows of the pre-market session. We're down 28 handles at 40.6375. Spent a little time over unchanged, not very much. That closing price, 91.75. This could be a big level if we could rally 30 handles today. The buck's up 20 cents at 103.31. Bonds down just a tad at 127 and 17/30 seconds. Crude getting the old Russian oil output cost bump up $1.41 at 79.47. Gold getting farther away from 1900, down 440 at 1874.10. Silver trying to remain in the 22 handle, down a little over 6 cents. And Bitcoin down $205 at 21,805, but holding up pretty well. Let's bring in Triple D here. I know he's excited to talk about the PayPal earnings. He wants to talk about the Lyft earnings. Triple D, what's out there? What are you seeing out there for the after hours trading?
I'm seeing tech wreck. I'm seeing continuation of what we saw last night, which was somewhat predictable because we know the 2-day rule, and I haven't talked about this for a while, but when you get a reversal in trade, which we definitely got for a lot of tech stocks yesterday, there is usually follow through the next morning. So usually it's predictable that if you're shorting some of those tech stocks into the close, that they're possibly going to open down the next day. And then we're actually seeing a couple of leaders fall down here too this morning with Tesla and NVIDIA both giving back here. I do have some NVIDIA position on for a day trade, so I'll limit my comments there. But just telling you the weakness here now, hitting a little bit of that leadership as well. Complete turn yesterday. I mean, rug pull to the bulls, bears swinging back heavy, still in a trading range though.
Did someone call the Bears? The bear. What's up? How we doing?
You're back.
Chief?
Mitch
I'm
is
back.
back. He never got off the bear train. He tried to get off the bear train.
Wait a second. Can we just roll the tape from last Thursday? Can we roll the tape from last Thursday, please? With the old Triple D Mitch Dennis bullish indicator. We talked about this on at the close. We talked about this on at the the closing print with Jeremy Newsom. You guys gave me that incentive to start really looking hard for some sell signals. It didn't need much because I kept on preaching about this 4,200 area. We got up there in September. We almost got there in December. Miraculously, we got there in February of not such a great earnings season. And, Pump and Powell, I mean, he did his part last week. We didn't immediately come off that area. But, Dennis, I'm glad you mentioned the tech. Because, and this is just not specific to today, this is why I kind of feel that the highs for the year are in. And
it's
maybe
kind of now. Yesterday you were convicted. Stop. On the closing print yesterday, you said you were convicted.
I'm convicted. I haven't been convicted.
The high for the year is in. I even tweeted it out what you said.
Yes,
the high for the year is in.
Well, now I'm saying the all-time highs are in.
The all-time highs are in. We're never going back
this
here
is because
ever
of tech.
again. Sell stocks are going down forever from this point in time.
Joel, then you're retiring today. You're selling all your stocks. You're done, man.
I wish I could. No, it's just these top components that I think as long as you have Apple, Microsoft, Google, and Amazon, just such a big part of this market. I mean, what would it take? You talk about the market getting back to all-time highs. I mean, what would it take to get Google back there or Amazon there or Microsoft there? I mean, and it just doesn't seem like you can do it until we get some change. I mean, we get this rotation, but as long as you have such a drag, I mean, look what Google did over the last couple days.
Well, Google's its own fault.
Yeah,
we know that. I'm buying my Google back at 85. We know I sold half my position before the earnings because I didn't want to take it through earnings, which that wasn't the reason it sold off. It sold off because of the failure of its AI product. I'm coming back to 85. I'm buying half of it back. It's 95. It's got over halfway there. No sense going into it now because trend is broken and everything. So I think you're going to have a redate maybe with the GOOG at 85. That's where I'm going back long the Google that I just sold at 109.
I mean, 85.
I'm not sure where I sold the Google. I thought I got it's the Goog Al. I own the Goog Al. That's what I'm looking like.
Oh, that's very different there, you know.
Well, they're about the same though. Must have been 107. I have to go look where I thought I got 109, but I guess I didn't. But unless that was after hours. I don't think so though.
For the L, I mean, it made a triple top at just under 108 or at the 108 area, and the Goog, I don't know, they trade. Nah, it's pretty much same with the Goog and the Google, but not a good morning, Dennis. I mean, they're hitting the tech. We did have a little rally near the end of the day, so that made people, a little bit optimistic, but just the overnight selling is putting a lot of pressure on the tech stocks and just about everything else. We got to go to this Lyft report.
Oh, yeah.
All right.
I mean, come on. This is
go to
horrible.
We'll go to Lyft. I just want to mention, though, I am swing short on that Tesla, so I just put it out there.
Okay.
Swing short, still holding that from 211.31s. So it doesn't look too bad there.
Holy
on
Mitch,
Tesla.
You got the top. You're like just trade Tesla.
Who's been shorting Tesla the last 2 weeks? Who's been shorting Tesla the last 2 weeks and making money? Making money.
Money Mitch is the only person that has been shorting Tesla over the last month and been making money on it. That's impressive money, Mitch.
All right, let's keep going. Let's get towards that Lyft disaster stock of the day. Definitely. I don't know who's calling the Lyft. You might not even get the Lyft if you keep calling for it. They might get out of business soon if they keep losing like they are. EPS, a loss of 76 cents, missed a 13-cent estimate. Sales of 1.18 billion, beat the 1.16 billion estimate. Lyft Q4 active riders were up 8.7% year over year. Revenue per active rider up 11.5% year over year, but they see Q1 revenue at 975 million versus a 1.09 billion estimate, and definitely taking a hit, but surprise loss on that, 76 cents on the loss there.
This is an epic disaster, and I mean epic disaster, because one, Uber's numbers were solid. Two, Lyft is supposed to be profitable this year, making money going forward, and all of a sudden back to the loss column with like a vengeance, like major losses. Twitter follow, you should follow this guy, Wasteland Capital. It's at e-commerce shares. He broke down this Twitter report, or this Lyft report, and it was fun. He doesn't hold anything back, but his major concerns, he had a lot of major concerns here, but talking about R&D, saying they spent $856 million in R&D last year. And just to compare, he says Tesla only spent $3 billion. I mean, you got basically, he says you're a taxi dispatcher. This is what Wasteland Capital is saying. You're a taxi dispatcher, and you spent $856 million in R&D. What's up? Why spending so much money in R&D? And if you do look and break it down, the cost of the revenue went up substantially last year. Yes, their revenues overall went up, but I mean, you've got to think there's got to be some efficiencies here eventually. This company is just finding a new way to lose more money. I mean, they were supposed to be profitable this year, and they were supposed to make money this quarter. This is a disaster. Stock giving back in 3 days, giving back its entire January run, Joel, the entire thing.
I know.
It was up 70% in January. It gave it all back in 3 days. I guess when you're dashing for trash, make sure you get out in time, because if you don't, that 70%, poof, gone. Have fun.
Make sure you know what day the trash man is coming to pick up the trash. Because
earnings.
if you miss it,
Not
I mean, that
good.
was the other thing. I mean, some of these gains, right? Tesla, Lyft, all these 70%, 50%, 60%. Some of them were like 100%. I mean, that's just not. That just is not a normal market. Those are decade gains, right?
Gifts.
Yeah, absolute gifts. So I mean, and that, also some of the trash stocks moved up. I could talk about this technically, and the only thing I'm going to say is someone's making a stand here at the 1075 area. I mean, they are just absorbing everything that is thrown out them. Pre-market low 1073. Whether they're going to get smoked and this thing's going to go down to the low of the move at 966. I see some other daily lows, 1056, 1006, but I'm not, it's just not bouncing, but just seems like you have just someone bringing in. Maybe they have some options. Maybe they have something. Maybe they're trying to lock it in. But man, that 1075, I would just keep an eye on that as a potential support. That's a capital P on that
well,
one.
you know what the fun thing is? The low of the year, Joel, the low of the year, and I can't believe we're talking about this because this stock was up 70% 3 days ago. The low of the year is $10.97. It actually was trading through its low of the year after having a 70% run in 5 weeks. Gave the entire 100% of it back. It gave the entire thing back, most of it on this report. This, again, I don't know. And maybe you're going to bounce there because you're right there at all these bottoms. So if you're looking for a level to bounce, you got an $11 level to bounce. But, I mean, are investors going to sit around here and wait for Lyft to turn it around when they were supposed to start turning around right now? When we saw that fantastic quarter from Uber, and let's be honest, the Uber quarter was awesome, and they're hitting that stock too. So here, as much as they were buying stocks on bad news, they were selling stocks on good news the last couple of days, and that is never good news for the bulls. So, and I said this on the closing print. You know what the awesome thing about being a trader is? You're allowed to change your mind. So now we go from this mentality of buying dips to selling rips. Not saying you're selling today, significant sell-off, but there'll be a pop. There always is. There's going to be more opportunities. So there's no sense. I don't think you have to go and panic here and sell on the whole. I don't know about on Lyft, but on a lot of these other, growthy names. But writing's on the wall here that the bears still have a major case.
Okay. So we covered that. I gave that area. One stock that I probably would not whoop up on today, and it's just I mean, the way the Google's been, let's say we're going to have a big down day. Yeah, Google can go down again, but it's down 8 cents. It's holding up pretty well. So that would not be, after the 2-day bashing that it took, that would not be my top candidate. Did you get it to short? You did get a gap fill yesterday, trying to stay green. So keep an eye on that one. But Uber down 2, it got a big a big move. I don't know how this whole plays into the whole travel, leisure, non-recession kind of thing, because I mean, this is right now Lyft seems to be standing out alone is in this area. I mean, everything else,
I'd be buying the Uber pullback over the Lyft, and I know Lyft, everybody's gonna and again, the 11's big, so if you're a trader, maybe you're gonna that's a natural level for it to bounce the lows of the year. But I like the Uber long term a lot better. So what I'd be looking for on Uber is and again, I don't know if I'm buying dips here or not yet. I'm kind of switching my head to sell the rip again, but 50% retracement of the recent move, like 30 up to like the 37. So get that 33 area, another $1.50 down from here on Uber. I think if you stick in your long-term portfolio, I think Uber is going to be the big winner here.
Yeah. Well, Lyft has been a loser since day one. Since day one of the IPO. I can remember watching this. I mean, this thing opened up and went to like 85 or something like that. 88 opened 87.24, went to 88.60. on the first day, and it closed that day at 78.29. Now I'm not going to bring up the dailies to see what it did the next day, but I'd be surprised. I mean, it probably got back over that closing price at 78.29. But there's a look at Lyft and Uber.
You're only a buck and a half off all-time lows on Lyft. So most people who have been holding this are losers, meaning that they're not losers, but they're losers on this position. So 10, 11 bucks. You got good support here at 11. It's a natural area for maybe a day traders to bounce. So it's taking that out. Stop yourself out at. I think you probably stop yourself out at like 10. Maybe even the 10.56, which was the low from the 30th. Maybe you give yourself 50 cents or something.
Yeah.
But you want it to bounce here. It is bouncing at the level it needs to bounce for a day trade, not for the bulls. I mean, it needed to bounce a lot earlier than that for the bulls. This thing is going to have overhead supply everywhere there now. But we are still in a fading market. Buy the dips, sell the rips have worked. This is not what I'm looking to buy the dip on, though.
Yeah, and if you're looking, if you're looking to buy the dip in Uber, I mean, it's down $1.36 today. I don't know. Maybe I think if you do step out here, you got to risk that at least down 32. And I don't know. Let's see if you can get a little bit more of a retracement in Uber before you try the long side.
All right, let's go to PayPal here as PayPal reported their earnings. Q4 EPS at $1.24 beat the $1.20 estimate. Sales at $7.38 billion missed the $7.39 billion estimate. They see Q1 adjusted EPS at $1.08 to $1.10 versus a $1.07 estimate. Net revenue growth at 7.5% and also sees fiscal year 23 adjusted EPS to $4.87 versus the estimate of $4.75. They're also expecting to do their share repurchasing of about 75% of free cash flow.
Okay, we're gonna give a lesson here on options, and it's a good one. Can you go into that? Yeah, go closer. Yeah, bring that chart. Joel's reading my mind here. Make that chart really, really big. This is your after hours trading. If you look at the right of that chart, and I want you to go and tell me what the low last night was. So right off the print, they hammered it. Right off the print, they hammered it down. How low did it get?
72.70.
Got down to 72.70. So if we go to our fund options chain and look at what I'm going to look at is the closest one to the close. So you could say like the 78s. So the 78s for February. We'll look at the calls and the puts. So we're figuring out what the straddle is. $78, $3.40, and $3. So $6.40 was the expected move. So we go $6.40 was the expected move. You do that by adding up the calls and the puts. $6.40. So $78.42 minus $6.40 gives you to $72. What was the low of the move?
72.70.
So it came within 70 cents of the expected move. And then for whatever reason, they decide, no, we like the quarter. The algos decide, no, we aren't selling it. So we just did $6. Forget about that. We're not doing. Now we're going to buy the hell out of this thing. We're going to buy it back to scratch, and then we're going to buy it even farther. And then in the next 10 minutes, they took it from 72.70 up to.
The high was 85 even.
85 even. Fun exercise. Let's add up the $6.40 expected move, and that brings you to 78.80 plus another $6 brings you to 84.80 was the expected move on the upside. They totally. CC Legator, if you're listening here, we are teaching your stuff right now, and it is awesome. Totally held it within the expected move. It tops out at 85. And the algo, no. We don't want to buy it above 85 because that's the expected move. And then they sold it back off, and now it's back to even. Holy mackerel. Just murder everyone that's chasing. Chasing in this market is the recipe to lose money. That is what we are in. 2022, don't chase. 2023, don't chase. Don't chase these things on earnings either. They go down 6, then they bounce back. Then they go up 6. Then they sell off, and they go back down. Crazy moves in this, but held in by that expected move. So if you're trading a stock after hours, please be aware of what the expected move is. You again do that by adding up the calls and the puts. This stuff works, folks. It works.
Just to add it, I mean, it also adding significance to this is like, what about the gap down day that you had a couple days ago, right? You gap down, you had a gap between 83.80 and 85.20, right? You split that, that's 85 even. people that, were holding that day saw it hit 78.10 yesterday, and they're looking like, holy mackerel, 85. Oh no, I'm getting almost all my money back. I mean, these 2 days were pretty outrageous. On the downside, there's nothing supporting that 72.70 low. I just would have looked at the start of the gap at 73.38, which would not have been a bad buy, in retrospect. But eventually get down to fill the gap. You would need to get to 71.26. So, but nice. We started talking about that on the pre-market show, and it's something I know traders have been using that over the years. Some sophisticated, you got to obviously have the right margin and be aggressive and be able to rely on it. But holy mackerel! And now you're up a mild 93 cents. After all that calming down, we'll just look at yesterday's high. Oh wow, that's way up at 84.80. Wow, this thing's wide. I just say better hold 78.10. That was a low from yesterday. On the upside, I can't really give you a good resistance level. Oh no, it's 81.80. You may get to 81.80 today. I wouldn't be too surprised if you saw that on the upside.
I don't know which direction it's going, but I just know respect the expected move. Respect the expected move. It's a mouthful, but that's what you got to do. And again, how do you do that? You have the calls and the puts at the same strike. Go to the strike that's the closest one. You can go a little bit farther, but the easiest to go to the closest one with the lowest expiration, and then you get your expected move. So just teach it one more time for you latecomers. The way I did this on PayPal is I went to the 78 calls and puts for the expiration of February the 10th, which is today. And I added up, and the options are not open right now. So we're looking at the closing prices there. 340, 305, 350. I was kind of middling it because I was looking at what the closing spreads were, is how I was getting a little bit more accurate. But it's 340, 340, 345. And then, so you add up those two, you get to the 680 that I was adding up. 340 and 340 is 680. $6.80 means up, down. Why is that the case? Because if you bought the calls and the puts, that's where you'd have to go to make money. So you're saying, I think it's going to be a crazy move, but I don't know the direction. I'm buying the calls and the puts. That's the expected move of $6.80.
All right, let's get to oil now. Let's talk a little bit about as oil catches a spike today, as Russia will cut oil output 500,000 barrels per day in March. This was reported on Friday, and you guys can see it's causing some of these oil stocks to spike. WTI did a spike over 80. Been really close watching to see if we're going to get into the 80 or the 60 handle in oil. If we're in the 80s, I can see these stocks continuing running. If we're in the 60s, maybe we finally start seeing energy turn around. Right now, it's looking like we're back towards the 80s.
We're in the last 2 days, yesterday and this morning, we have now went back to 2022, where they hate the growth stocks and they like the value stocks. And if we look this morning, if I go to my screen, I'm looking at what's trading up. All the oil's trading up. But then you go consumer staples are trading up. They're a little bit defensive. You can look, basically, and the drug stocks are trading higher. Some of them are trading higher. Lilly's trading up $2. The other ones are barely down. Some utilities. So this market's all of a sudden just going full defense. Funny how this works. The rotation has just been value to growth, growth to value. It's been going like this for the last 6 months. Value growth, actually really October-ish. Value growth, because before then some of them were selling everything, but value to growth, growth to value, value to growth, growth to value. We've been growth to value for most of back half of 2022. Then when the calendar flipped, and then we went value to growth, and value to growth violently. Value to growth, selling off all those useless value stocks. We don't need them anymore because we got Powell going to pivot, and the growth stocks are all going to take off. We got all our growth stocks. We make thousands of percent on this thing. Retire young, YOLO, growth. Go, go, go. Oh no, they just pulled the rug out yesterday.
You know what they should do with these headlines? They should say Russia cuts output by 500,000 barrels. And everyone else is greasing the pumps, baby. They're saying, we'll make up for that. No problem. No problem at all. And then you get a pop over $80 to 80.33. And now you're $1.50 off this high. We have seen, it's been a while since we've heard the Russia or the OPEC, pulling the old, we're going to dampen supply trick. And then you see the same thing, boom. And you'll look in a couple weeks, and probably even Russia. They're like, oh, we'll say 500,000, but you know what? We'll sell into this rally here. We'll get this thing over $80, and we'll still do the same amount of production. So that's That's my cynical take on the oil move, if you guys don't mind. But I want to be consistent with my cynical.
The P's are low, P's are cool, low P's are cool again, just for at least for a couple days. We don't know. We could switch back again. Obviously, use your leaders. I mean, and actually, yesterday Tesla and Nvidia were holding up fairly well. It was the rest of the market. Who has been the leader on the downside has been the Goog monster. And again, maybe it's just getting to the point of oversold because it's actually up here this morning. So maybe it's just like seller exhaustion on this thing. We've been going down for 3 straight days because their AI product gave them a dumb question and gave a dumb answer back. And we punish, this thing to the tune of 10% off the market cap or more, actually about 12% off the market cap for this. I think it's been severely punished enough. But again, it's come this far. Unless they come out with something really cool, and say, oh, yeah, well, this is the reason this happened and it's never going to make a mistake again. I don't see it bouncing right back from this. So I'm going to wait. Again, I think I'm going to buy some of the stock that I sold back in that 85, 86 area.
What's with this AI thing? Haven't people been working on this for a long time? I mean, it's just because this chat GPT got going. I mean, look what they did. Look, I mean, people.
So here's what they're saying on Twitter. Is that because Microsoft jumped the gun and got their product out so quickly that it pushed Nvidia or it pushed Google to get their product, which they've been working on, get it out there quickly as well. So it's not perfected. They got it out there too quickly, didn't get it perfected. Obviously, they're showing it off, and it gives the wrong answer, and that's the end of the story. And it kind of killed ChatGPT altogether, not just for Google. Like, look at the Microsoft chart, Joel.
Yeah.
I mean, boom, all of a sudden it's like, maybe this technology isn't as good as we thought it was. 276 down to 260. So if you want to get in, you think ChatGPT is the future. I think AI is the future. I don't know if we're even going to be talking about ChatGPT a year from now. I'm pretty confident we'll still be talking about AI a year from now and 10 years from now. So I am still a big fan of artificial intelligence. I did buy some IBM in my long-term portfolio. It's a value trade. Doesn't look great on the chart, but I'm not all about technical. Sometimes I'm just about valuation. And I think if we're going to start focusing more on AI, I do think IBM is a sleepy play. It's not one of the ones you're going to think about. But again, what are you paying? What's the multiple on IBM there, Money Mitch? I think you're paying around 10 or 11 times earnings last time I looked at it.
Yeah, that one's really good.
Everybody hates IBM.
Pullback too.
You wonder if it could get some love, and maybe they're going to fail it. Like I thought it was a blockchain. It's 13. The P is
13.9. Yeah.
Yeah. It's a value. You know me. I'm the value long-term guy. I get the nice little dividend in IBM. It's pulled off the high. Somebody's saying, why don't you wait for 115? I was like, well, I thought I was going to 115. I wouldn't be buying at 133. Obviously, I don't think it's going to go that low. Maybe you should wait. Maybe you're going to get back that low. But I think if we start to turn into more value type stocks, I think IBM gets some favor. I mean, like a day like today, IBM isn't even down. So remember, IBM actually moves opposite sometimes to some of these other growth names. You got to know your relationships. IBM is a value stock. It is not a tech stock. You're
the saying, original AI, of course, right?
Tech stock. It's value tech, though. Value.
It's Watson. Watson, right? Well, don't forget about Watson AI.
This is their field. Maybe
it's Watson AI. Come on.
And everybody's got it for dead. Everybody's got it for dead, and maybe that's the case. But I'm taking a shot. I've had some luck with IBM before. It's 20 points off the highs. It hit 153 back 2 months ago. It's been getting hit because who wants low PE stocks that make money? They want high growth that makes no money. They want zombie companies right now. I think if it turns back, I think IBM will come back into favor.
This is the area. This is where it, and actually, I can remember talking about this on earnings day. It was back at the end of January, and I did the 50% retracement. That was 134.38, and I just looked. There was a couple other lows in that area. So what you need, Triple D, is you need just to hang in here. A couple more days because, it's kind of thin here between 135 and 130.
It's kind of a scary spot.
It is, but yeah, don't fall in love with this one. Get
out. Well, I wanted to put it in the long-term portfolio, so I don't want to just sell it because it goes down $1.
I know.
You think if it takes out the low of the move, maybe don't hang around though, and then try to get a lower price.
I would. Yeah,
stop myself out at 132-ish.
Yeah, the low of the move is 132.98. So,
in this market,
give yourself a little room.
Yeah, in this market, you get stopped out on everything. If you're using stops,
Yeah, the volatility out there,
you're
those
getting
algos.
stopped out on pretty much everything. It's wild. You know, that Rivian, think about that Rivian trade. I should have been stopped out on that 4 or 5 times. I actually ended up making money on it because I was still like, well, this growth is still in favor. And I think Rivian's eventually going to come back in favor. And it made a new low on the move. And right after it made the new low on the move was the Gil Morales undercut and rally trick.
Yep.
And boom, that was what, you know, the catalyst started. So these things like to make a new low, to hit the stops, to shake everyone out, and then they like to rally in their face, and even sucker in shorts. The stocks like to make new lows. So it's hard using tight stops in this market. As a day trader, you have to do it. As a swing trader, which swing trading has been tough, you should be doing it as well, but you can stop out on a lot of stuff. So you're better to actually buy the new low sometimes, as opposed to like leaning on them.
I think a lot of people are asking themselves the question that you asked yesterday too, Dennis. Is AI just a fad, right? I think that's what we need to keep in mind.
No, I did not ask. I asked, is ChatGPT just a fad? Yeah. Big difference. AI is not a fad.
Is there really a difference?
Yeah, ChatGPT is a product made on AI. It's just a product where they're talking about. I don't think we're going to be ChatGPTing our whole life going forward. I do believe AI is going to be a big part of our life going forward. So I think ChatGPT is a fad. I think AI is for real.
Is this just the next buzzword like metaverse where stocks go up and then come down on it because the technology is still years away from it? The same way we ran into NFTs with the euphoria with kind of the meme stocks. One thing I'm noticing is a lot of times these stories are coming out after we get that euphoria of some of these meme stocks ripping, some of these short squeeze. The euphoria starts going and then they bring out the new buzzword and all of a sudden everyone wants to get in it.
Especially Baidu.
Oh, what?
Baidu is blockchain. Baidu's EV. Baidu's ChatGPT. Baidu is always participating.
Baidu's everything.
Baidu is everything that is hot right now. They always make sure they're participating in all that stuff. But again, I don't think we'll be talking about ChatGPT 2 years from now. I believe we're going to continue to be talking about AI. And to the chat's point, AI has been here forever. Watson, you know, beating Jennings back in Jeopardy. I mean, how many years ago is that? That's going to be like 10, 15 years ago. And still, you know, like you'd think IBM would be leading the charge in AI, and they have disappointed a lot. I keep giving them a pass, though. I'm thinking eventually they're going to get some love, but you know, they're pretty quiet here on this AI front too. I don't hear about any ChatGPT products coming out from IBM right now. So maybe they're sneaky doing something. I hope they are, but I feel like eventually IBM should be a part of all this AI stuff because they've been on this for a long time. There's got to be a few people that know something about AI and IBM. They created that Watson, which is pretty cool. Create something else. Get out there, IBM. Do something. I'm banking with you for at least a little time here right now.
Where'd you get out of that final piece of Rivian?
21?
Yeah.
21, I think, Joel?
Yeah.
21.
Gotcha.
I'd have to go look at my confirms. I think I went 21. And I got 22.
I know. You held on.
You gave me the text. You were like, you're allowed to sell the rest of your Rivian. I was like, gone. Sold it like immediately log in, gone. I wanted to sell it like at 19. I was like,
it was
so help me out.
It was just so like that. I mean, it went, but it just seemed like it went so begrudgingly, you know, with the market in January. And then any excuse for it to go down,
it did.
It went down. It went down.
You can't get married to any of these positions. Look at Lucid. LCID. And I mean, we had, oh my goodness, they're going to take it over. Who was taking it over? The whole Saudi fund was going to take it private.
The Saudis.
Was the Saudis all going to take it private? The stock goes up 100% that day, goes from 8 to 17. When this, hey, again, back to Harlan Payan.
What an opportunity.
Well, Harlan, we love you. When the circus is in town, you sell your peanuts. You don't wait to sell your peanuts when the circus has already left.
What was the Saudi one?
The elephants were doing dances and bouncing their balls on their noses and everything, and they ate all the peanuts. They ate all the peanuts on the people who didn't sell. Lucid, right back down here to $10.
Oh, Lucid.
Sell your peanuts while the circus is in town.
Yeah,
folks.
It was Lucid.
Sell them while they're in town.
Yeah.
Rivian, I sold my peanuts while the circus is in town. See you later. Valuation, I said all along, made no sense, but they were buying growth at any cost. And you know what the dumbest rally was Intel. And I sold half of my Intel, or I sold a part of my Intel. I don't know if it's half. I sold part of my Intel at $30 and change. I can give you the date back on the 2nd. No, not on the 2nd. I'm looking at the calendar wrong here. The 23rd. Wait. No, it was the 2nd. Yeah, February. I'm getting this screws me up. This one calendar I've got puts the day ahead of the month on this charts. That's dumb. It should be month day. So they should fix that. But that's what screws me up. But on February the 3rd, we had Intel reported the most disastrous quarter that you could report. Said nothing good. And 6 days later, they bought this thing to scratch. And I'm like, I should sell the whole thing, but I've had it for so long. I'm only going to sell part of it. I sold part of it like 30-10 or something. And went to 31 that day. And I was like, wow, is this thing going to continue to go? And then it turned around and gave it all back. That was the dumbest rally. That's when you really knew the circus was in town. When they were buying these crap earning stocks like Intel and buying it right back after 6 days. That's unbelievable.
Yeah, the mentality out there really quickly. I mean, we were in a new bull market. Can you blame them for buying stocks, right? That's what a lot of people are talking. Now the questions start coming. Let's get to our guest today. I'm excited to get to it because someone in the chat said, David Trainer is an AI? Who knows? Let's find out. Let's bring him on here. Let's bring on our guest. All right, David Trainer, founder and CEO of New Constructs. Welcome on. It looks like you're AI today. So give us all the answers, David.
Yeah, I'm here for all the answers. I like the walk-up music. That's a nice change.
We got all the bells and the whistles here now.
I think maybe some
trying to
Led Zeppelin
compete.
next time, maybe if I get to choose. Would be a little
Got
better.
you. I'll keep
What
that
would you
one intact.
choose? What would you choose?
What song will you using next time?
Let's
Ooh,
see.
on the spot.
Yeah, you got me. You got me on that. I was thinking stocks. It's hard for me to switch over to music and
Rock and roll, man. What about a little bit of rock and roll? Anyways, David, I always like to bring you on a little bit into earnings season because this is what you do. This is what New Constructs Media does. It looks at analyst earnings, and I also have a pretty good memory. And I don't know if it was Toll Brothers or something. I wish I would have kept this on the chart. We had you back a few earnings reports ago, and you said that this stock was being priced as if they were never going to sell a house again, that they were never going to build a house and sell a house, and that turned out. Was it Toll Brothers or was it one of the
It
other?
may have been D.R. Horton.
Okay. I know it was. I wish I would have kept that on the chart. But anyways, what a confusing earnings season. We brought you on to bring clarity to it. Numbers, some good, some bad. Guidance not great. They still bought stocks up. Let's look under the hood. What did you see in the Q4 earnings reports?
I think we see an economy slowing, and I think inevitably, we're going to see some impact of this huge amount of tightening. The idea that we're going to somehow navigate through all of that, I think, is unrealistic. Our machine learning AI has been signaling that margins, returns on invested capital were sort of spiking unrealistically high, and economic earnings, which take into account the cost of capital, we're already starting to bring that down. And so we think that the headwinds of a higher cost of capital and the resulting impact on demand are going to bring returns on capital down as well. And so, we're gonna see a much more mixed earnings environment for a long time. The strong companies are going to do well. The weak companies are going to do weaker or do worse. And I think a lot of these crazy circus in town kind of stocks are going to continue to get crushed. This early January rally is a big time suckers rally, and a lot of these companies are going to probably go bankrupt.
What's a long time? What's a long time in your opinion?
Yeah, great question. It's hard to say because things were crazy for a long time in terms of valuation. So, gosh, Joe, I don't know. It's hard for me to say. I mean,
okay, yeah, because we've had some people come in and say, well, yeah, we're going to have a recession. It's going to be, the back half of the year and whatnot. I mean, all these, all these layoffs too. That's another thing too, where they're rallying these stocks off, layoff announcements. We can. From my experience, when companies are cutting costs to make the bottom line look better, it's not good in the long run. But let's get to some specific reports here. And this Disney report, I honestly, I don't know what people were doing in the pre-market. I don't know what off the regular session, this was nothing but just a straight out sell, big old red bar. Tell us what you had in the coffers for the Disney report and the price reaction.
Yeah, I think we like Disney. It's on our focus list long. It has a huge competitive advantage relative to the other content creators, especially the streamers, especially Netflix, and its ability to monetize content. And I think things, they had a perfect storm. I mean, you had Netflix, which could compete with capital as a weapon, right? Like they could just lose money, what seemed like into perpetuity. It's always tough to compete against someone who can do that. Then you had COVID hit, right? Then you had kind of some of this, political issues hit, and and it hurt that industry. It hurt everybody in the outdoor entertainment type of industry. And so, Disney took a lot of punches, and I think they had a leadership issue for a while. Most of that bad stuff is behind them, and what we like most is that they stayed true to their character, which is to be smart about allocating capital. And so we think, this is the next couple of years is going to be all about sort of Disney, reclaiming its spot, as king of content. As the Magic Kingdom, and we'll see its margins and returns on capital come back up. We'll see it start to really crush Netflix because it's got a unique ability to monetize content that Netflix does not have. And yeah, we think with Iger back in charge, the ship's back and pointing in the right direction. And it's not going to be pretty right away, but this is a good long-term play.
I mean, they're talking about reinstating the dividend later this year. I mean, investors obviously were very disappointed when they had to get rid of the dividend. That was obviously pandemic related. So I think it's about time once they could figure it out. I mean, the Fox acquisition hurt them as well, and obviously put a lot of debt on their balance sheet. But I still think I agree with you. I think eventually Disney is going to figure it out. I do think this thing has had just too much too fast, which is why it had the reversal off the earnings. It was up from $85 to 120 basically in a straight line. So I think it just needed to cool off. I think actually this is not necessarily today, but this is a stock I would have on my shopping list. So
all right, I'll go to David now and ask him a little bit on these kind of zombie stocks, I'll call them, that have been hanging around. Are we finally going to start seeing stocks like Affirm disappear? Stocks have just been burning. What do you think about that, David?
Yeah, I mean, I think this is to Joel's question. What is the short term? What is the long term? I mean, who would have ever imagined we live in a world where a company is literally entering bankruptcy and like Bed Bath & Beyond, and it rallies 20, 30, 40%. Same.
I know, it's insane.
I mean, it's nuts, right? The meme stocks. I mean, this extreme dilution that the AMC shareholders are experiencing with the whole ape thing. Like, it's just a complete and utter ripoff, and it's like they're just running off the cliff. Like, hey, here we go. We'll do anything to be a Bored Ape. It's really, at the end of the day, it's really pretty sad. So, but I do think that the sort of spike in liquidity that we saw at the beginning of the year sort of caught a lot of investors off guard. Nobody really thought that the Fed and the Treasury were going to kind of like get behind the tightening curve, and that's kind of what happened. That's what fueled this rally. And I think that has ended, and the tightening is starting over again. And so these companies are going to get choked off capital, and they're eventually going to get choked off capital anyway. Really, the deal that Bed Bath & Beyond shows you just how bad a deal companies are doing for investors to stay alive.
Yeah.
And no one's just going to throw any more money after these zombie stocks, these zombie companies, because they're just losing so much cash. Firm's a great example. Terrible business, terrible cash flow. They're going to have trouble getting people to lend more money to burn so they can burn it, right? And they're going to have to just cut to the, don't grow anymore. And then we see just really what they have, which is no business at all.
And David, when you go into, bring the Fed into this conversation, I mean, we have raised rates. Easy money was there for a lot of these companies for years. It's not as easy anymore. I mean, when you're sitting and, you've got cash and you're looking at, T-bills at 0.5%, you get more aggressive with your lending to try to get some types of returns. So they're lending to companies and probably taking on maybe a little bit too much risk. Those dollars are not going to come cheap for them anymore. They're not going to be picking dollars up at 2, 3, 4% a year. There's going to be some ugly, interest rates slapped on to borrow for a lot of these companies that are burning cash, because the risk is higher and it's all risk reward. So, I mean, that's why we've always said with interest rates start to go up substantially, it's the growth stocks that take it the hardest, especially those ones that gotta have a lot of debt to get themselves going.
1000%. That's why we created the zombie stock list last June, when the Fed really officially pivoted to a tightening approach that we thought was going to be persistent for a while. And that's you read our reports, like the easy money's dried up, Dennis, right? Like no one's going to lend money on the hopes that just that money, well, the understanding that even if that money gets burned, there's going to be someone else to lend more money. As soon as that line of thinking or that type of thinking stops, then like it's over, right? I mean, it's like, well, if we're losing money, we're going to get back to a world where people don't lend money to companies that lose money. And if that's the case, these businesses are really in trouble, because they don't really ever have a chance of making any real money. So you gotta be pretty nutty.
What's the top of your zombie list? Can you show it? Can we show?
We don't show the whole zombie stock list, not yet.
Can you give us a few?
Yeah,
Of your top zombie stocks?
I got
these
one
are
on
these are
there.
stocks you think eventually could go bankrupt?
I got one on there.
Yeah.
Tell him, Joel.
Peloton.
Oh,
Is Peloton on there?
On the list. It's on the list. Yes.
On the list?
Affirm is on the list. Beyond Meat's on the list. Carvana.
the car vending machine, right? The car vending machines out there.
And you've had these on the list for quite some time, correct?
Correct. Yeah, they're down.
Yeah, so you've been proven right here. 2022, 2023's been a little bit different story here, but I mean, anything can rally a bet. Carvana down from almost $400 a share down to what did it get to at the low? $3.
What about the Upstart?
Everybody's like, oh, the Carvana's back. It's back at 11. But
that's right. Yeah, we think this is for sure a head fake rally. I mean, the underlying economics of the business are not getting better. They're worse. And from a macro perspective and from a micro perspective, we knew that this was a really bad stock a long time ago. We put it in the danger zone years ago. And we knew when they had maximized sort of their opportunity in large markets and then were forced to go into smaller markets to try to grow. We knew it was over. If they weren't making money in Atlanta and Chicago and bigger markets, they weren't going to make money in smaller markets. And so bad business for a long time. Another danger zone stock that's been down a lot recently, Blue Apron.
Oh my gosh, that's still listed?
Yeah. I would always be surprised when
I
I'd
did
see
not even
those
know that was still
discounts.
out
I was
there.
like, yeah, your first order, 90% off. Well, I don't know. If you got to give me 90% off to order something, that's a little scary to me. But what do you see in Blue Apron?
I mean, we see a business like we see with all the zombie stocks, right? No real competitive advantage. Like exactly to your point, right? If I'm having to super discount to sell, and what am I doing? Am I fast food? Am I home cooked meal? I mean, it's like, is there real margin in that? Who else can do that? And one of the things we saw right away is a lot of the grocery stores had their own private label version of a Blue Apron type meal.
Yeah.
And we've had what'd you call the oven dinners that people can make at home for a long time. I mean, this is not a new concept.
TV dinners,
dinners.
just a different
TV
way.
dinners, exactly.
Swanson.
Just Swanson's lean cuisine, right?
Hey, the turkey with the mashed potatoes
With a
and
little
the gravy.
gravy,
I mean,
you know.
you gotta,
Good. That
Oh,
Salisbury
good
steak one's
Lord.
pretty good too.
All right,
Lord.
let's get to a real stock and
All right.
Tesla. Let's go to Tesla. I mean,
Let's take a look.
71% move, big move. Looking for more. What did you think about the earnings report? Dennis made a good point with Musk, coming on. He, some people like that, like bash their stocks, like the RH when he came on a conference call, just like things are horrible, we're just and they're not getting better. You get someone like Musk that likes to talk things up. Nice rally in Tesla. What did you think of their report?
I'm more of the same. I think a lot of empty promises, broken promises. Look, I mean, the 50% growth target, right? Meaningfully broken. We're seeing demand wane. We're seeing the channel stuff. We're seeing pricing power erode. All the things the Tesla bulls have sort of championed for a long time have worked. Are no longer working, except for stock price, bro. So yeah, I think the walls are closing in here on Musk, and really have been for a long time. It's just been an extraordinary ability to sort of disbelieve what's going on by a lot of Tesla bulls that's kept this thing going. In our opinion, the economics of this business aren't scaling. I got a great quiz for you guys.
Sure.
Yeah.
How many How many Ford Mach-E's did Ford make as of November of 2022? How many they produced?
I don't know, 10,000, 100,000.
150,000. Right,
Mm.
and for how many years have they been making the Mach-E? I'll go and answer. 2 years. How many cars did Tesla make in its first 2 years?
Maybe one.
32,000.
Oh well, I was talking models.
No, yeah, that's right. So the Mach-E, they made 150,000 2 years. Ford did. Tesla made 32,000. All Teslas in its first years. How many years did it take Tesla to get to making 150,000 cars? Do you think?
5
years.
What? 5 years. There you go.
Yeah, good guess. But the point being, right, the legacy automakers are going to scale into making EVs way better and way more
faster.
profitably. Tesla burned billions and billions. Ford is already profitable on the Mach-E. Not immediately, but at scale, they're going to get there much faster. And that's not just true for Ford. It's GM, it's Volkswagen, it's Mercedes, it's BMW, it's it's Hyundai, it's BYD in China. The world is about to crush Tesla when it comes to EVs, and I mean it's just a matter of time.
It's just competition. I mean, the pie is going to get bigger, but Tesla isn't going to be 60% of that pie. It's just the math. I mean, I look and I'm like, it's so many different options now. Like they're in the EV in 5 years, we're going to have every major automaker is going to have all kinds of different EVs to choose from. So you don't have to go Tesla. There'll be all kinds of choices, and this is what I think it keeps me out of the stock is that. Maybe at $100, maybe the valuation finally became somewhat more reasonable, but it's just always traded with like, we're going to hold 60% of this pie and this pie is going to grow forever. And it's just, unreasonable to think that they're going to hold that 60% when you have so much competition coming in. That's my biggest issue. I think the pie gets much bigger. I think Tesla's a piece of that pie, but it's not a 60% piece of that pie.
I think you're going to need some leverage, some government subsidies like we had with the gas guzzlers that turn into gas guzzlers into kind of, instead of efficient gas, turn them into EVs. That's the only way you're going to get the consumer to actually pivot there anyways. But David, I wanted to ask you about the buzzword of the year, AI. What do you think about it and where do you see opportunities?
We're big believers. I mean, we've been using machine learning for over 20 years. We were doing machine learning before machine learning was cool. And we think it's super powerful. The biggest difference, two big differences these days, right, is that the processing power, computing power, is so much stronger that we can get the machines just have such a computational advantage over humans in terms of the amount of input they can take in. That's a big advantage. Number two, the quality of instruction given the machine is much, much better. And because of the machine's ability to take in more information, it can discern a little bit more between good quality and bad quality, identify more patterns. So that's created a big step forward. We've seen the same thing with our technology, right? We've been parsing out 10Ks and 10Qs for 20 plus years, having experts go in and fastidiously mark them up to show the machine what's right. And we reached a certain critical mass of expertly marked up filings that we can now go through these filings much faster, produce much higher quality results. That's been proven. And I think we're seeing these other AI technologies emerge as well. And look, a lot of it's just like, Mitch, I mean, there's no shortcut. Like you just got to go pound away at just preparing the machine with good data. The one thing I do want to point out is that AI is not like a magic program. It's really strong computing power, and then it's really good training data, right? Yeah. Machines they're not sentient yet. We're not like 2001, right? Or any of these sort of sci-fi things where machines can talk to you and figure stuff out. They can only do what they've been told. Their ability to take on increasingly complex instructions is great, right? And to process those super fast is great, but they're not figuring anything out new. They're not creating new patterns yet. So you really need to be careful. Things that are black box, watch out. Things that are people that are willing to show you what's going on, that's what you can trust. Because again, you need to be able to understand what's going into the machine if you want to be able to trust the result.
Real quick, David, we're up against the clock here. Just, you're just looking at the Q4 earnings season, the kind of guidance that we've got out of some of the major companies here, that the peak that we just hit here in January. Are you, overall bullish, bearish here for, let's go for the next, 6 months to a year? I mean,
Yeah,
what are the earnings? What are the guts telling you about your gut feeling on the earnings?
Yeah, I think we're very bearish. We think now we're bearish in pockets. I mean, we have for sure some long ideas, and I think that's the big difference here, Joel. Is that it's not so easy as
The market, yeah.
risk on or risk up, risk on or risk off, and that's great for trading. It's great for traders. I think we're moving into an investor's market where you need really to discern between companies that got real cash flows and cheap valuations, and definitely avoid those companies with really expensive valuations and no cash flows.
David Trainer, founder of New Constructs, joining us here on Pre-Market Prep. Thanks, David. We kept you a little bit long, but we'll get you back on again soon. Thank you very much.
My pleasure.
Little bit of a creeper rally here, coming
Yeah.
off the lows of the session. Dennis, any buying balances to skew that, or what are you seeing on?
No, it's the same thing. So we're seeing continuation. We're seeing the tech bounce a little bit, is really beat up. Google has been holding green all morning, but it's kind of moving opposite the market right now. You're seeing tech, get hit pretty hard here this morning. Oil, consumer staples, drugs. I mean, all the same stuff where they were hiding before. They're going right back in and flocking into that this morning. I would say I'm not. We just sold straight off 100 S&P.
We did.
So again, you've got to just kind of have perception when you're looking, and saying, "Oh, now we got to sell." I mean, if you're doing it now, you're probably doing it backwards again. We're probably gonna have another bounce here. That's going to give another opportunity. The bulls are not dead by any means. 400. I would love to see us down at 400 SPY. It'd be a perfect place for us to bounce. I mean, we had the nice little double bottom there going back to January 30th and January 31st on the SPY itself, 428 and 477. I'd love to get all the way down there and try for a bounce trade off the 400. I'm not sure we get there, but I'm looking more what to buy here this morning. Again, not long term. I'm still sitting with a hell of a lot of cash in the long-term portfolio. But as a trader, I'm just kind of fading moves, buying dips, selling rips. And you know what? The rip selling wasn't working very well, but all of a sudden it's starting to work again. So I'm doing both. So as much as, I'm still bearish overall long term, which, seems counterintuitive because you're supposed to be bullish long term, but I'm still sitting bearish long term. I think you could get a bounce here. So I'm looking for stocks and maybe even some of these beat up growth names. I mean, some of these stocks really been hit really, really hard, really fast. I mean, even like a Nordstrom, not saying I'm buying a Nordstrom, but Joel, this thing got up to like $20 or $29 after hours on Cohen. So stupid. I think it might even hit 30 after hours. You won't see it on the charts because it never got close to there in the regular session. I don't know if you can see.
Here it is. It's right here. I got it on the 60-minute.
Close to 30.
That's why I like to keep people ask, why do I have two pre-market charts? Well, the one underneath this, the 15 minutes gives you more of the pre-market action. But if you go a little bit farther out and then you throw in the 60-minute here, you can see how ridiculous it got. It got to $29.90, Dennis. Pretty good. Wow.
$30. Big hole numbers coming to play again. We're all the way back to 22 5 days later. And I mean, we're right here at the point where we're almost filled the whole Cohen gap. So now you're looking, you're like, well, I mean, it's still got Cohen in there. He may do something else. I mean, now I'm like,
yeah, he sold.
I'm almost, well, no, we'd see that filing. If he's doing that, he's going to start to get into some trouble. So I don't think he has sold. And you'll see the filing probably go by if he did. Maybe not if he's small enough. But I think, not saying, but $22 is a logical bounce spot for this. So as a day trader here.
Who's the guy that was trying to push Disney around and he said that he's done with this proxy fight? Come on, the guy that got involved with Disney and wanted him to split. He was on CNBC the other day doing the victory lap. Elliot? Was it Elliot?
No, Peltz.
Yeah.
On Disney, I would buy if it comes back near $100. It's just come up too far. It's why I sold my stock. It came up way too much, way too fast. So, I mean, we're in the market. We're still in a trader's market here right now. So even, you're looking, you like this stock long term, but when it goes up 30% a month, those are gains you're waiting a year for. So why not take the 30% gain here? Maybe it goes up 40 and maybe you're going to regret that. But this isn't, a small company. This is a big move for a very big company. And if we look from the 85 low to the 120 and a hit over 122 after hours
right
there,
here, over here.
It's an incredible 37. It's talking about almost a 50% move in the price of the stock.
It's like
45%.
I know.
Disney went up 45% in a month. You got to ring the register on that stuff. you got to ring the register on that stuff. You're not buying it at that point in time where Kramer's on CNBC and Appel's like, this stock is just the best of 120. It's your time to ring the register. You've got to take the gains. We're still in a trader's market. We're not, and yes, we've been in a bull market here since October. And yes, you can still be buying dips, but we're still in this trader's market, and we're still not out of the woods by any means. So I think you got to be taking the gains as you get them. So you see, big moves, stocks going up 40, mega cap stocks going up 40%. It's just too much too fast.
Okay. All right. I'm going to hop here in 1 second. I would just say, just to keep in mind, we got CPI coming out next week, right? And we've come off. So any kind of uptick or, worse than expected number could probably, that's why I think you're going to see a little bit more of a selling bias here today, Monday and Tuesday into that big print at 8:30. And then we're going to have, of course, Blue Putnam come on Wednesday, who's been spot on about how long it takes inflation to come down. We're going to bring him on, and that's it. I'll let you guys finish up. We are off the lows of the session we're 18 and the handles off at 40.73 and a quarter. I don't know why, but the 7-day low, if we happen to breach that pre-market low, always looking for follow through. 7-day low, believe it or not, was 48.50. And I don't know. I'm not going to worry too much about that pre-market high, but if we get near that closing price of 91.75, I expect that to be resistance. So a fun week, guys, and we'll check in with y'all later on.
Money
All right.
Mitch, it's just me and you for a few minutes here.
Now
just to say, people talking about Ford is ex-dividend here today. It is not trading down 80 cents. It is actually trading up 7 cents here, because if you held it overnight, you got the 65-cent special divvy from the Rivian monetization, and then you got an extra 15 cents from the regular dividend as well. So the adjusted close on Ford is $12.69. So Ford trading up here in the pre-market.
We'll see if Ford can recover. A level for me on Ford to recover is that 1280s where it kind of bounced last time. Let's see if it recovers 13. I'll look to see what happens there. And
again, this is where technicals are challenging, because they don't adjust for the dividend.
That's the hard part.
Actually, it doesn't adjust on the charts for the dividend, but this actually, isn't really trading at 1277 right now. It's really trading about 1357. So it's
always got to understand the stocks, right? You got to look underneath the hood why stocks are down. You might find out.
But on the chart, a technical analyst isn't going to care about that. They're like, oh, this is weak. This is now trading through the two lows of the move, now taking out the lows. I'm like, well, it's not. I mean, it went ex-dividend. So
that's why
this is one thing you've got to consider, that I hate just people who, I think you've got to have more than one tool in your toolbox. I love technicals. 100%. Joel, Mitch, you guys do a great job on the technicals. I don't use them as much as I use relationships, but I still respect the technicals. But I use, I'm like a trader with lots of different tools in my toolbox. Some people use their hammer. I wouldn't even say that technical analysis is my hammer. My hammer is relationships, where, I'm understanding how stocks are related to each other. But, I've got it in my toolbox. It's one of my tools, technical analysis. But this is where it's troublesome. Because technical analysts will be looking this morning and say, man, if we lose the 1280, that's taking out the low of the move. But it's not even, because it's ex-dividend. So it's tricky.
Definitely. I'll be looking at certain plays today. I wanted to give some kind of trade ideas and get your perspective really quick, Dennis. So like one that I'm looking at is like Foot Locker. This is based more on the Adidas move also. And I saw Nike start coming back down really strong. You've seen Foot Locker. It's been an absolute monster since pretty much back in July. This has been going up. So I'm looking to see if this is going to start turning around today. We'll see what happens there. Adidas could lose about 1.2 billion euros in revenues from the Yeezy stock. So I'm wondering if this will play a little effect on a stock like Foot Locker or Nike. They started coming down a little bit yesterday. What do you think about these stocks?
I think retailers have run too far too fast. I think the consumer, I think we saw, obviously off a few of these earnings, the Nordstrom earnings weren't great, but it got bailed out by Cohen. Capri was a disaster. We've seen RH warning. I mean, we're starting to see pockets of weakness in retail. Now we've had this ridiculous January effect rally in all of these names, and I think it's a selling opportunity. So I'm not a fan of buying the retailers here. I mean, again, you got to look at your PEs, you got to look at your valuation, you got to look at what's sustainable, what's not. But I just think, and a lot of them have low PEs, but they've been value traps. They've given you an out here. Some of them have rallied substantially from the lows. I think I'm more of a seller on retail.
Definitely. I think it's very important to kind of catch what's going on there. I saw Under Armour's report too, and that didn't look good. You see Under Armour's action. We saw Capri take a hit. Macy's doesn't look the best either the last couple of days. It doesn't look like this is the area to be right now. We'll see what happens. Consumer cyclical has been strong for a while. We'll see if that turns around also. There's so many names there that have been strong. And the last thing I'll just bring up, one that I wanted to see your perspective on. What about GE coming down? It's been holding in there, Dennis. I'm taking a look at that one too. Is this just too far for General Electric?
Yeah, it is. I mean, this stock has just been an absolute monster. And again, if you do the spinoff, this thing isn't trading at 80 right now. And I don't know, yours charts aren't adjusted either. This is up at $100 right now because you got the GE healthcare. So it looks like, oh, what the hell happened at the beginning of January? The stock got killed. It didn't get killed. It actually has rallied $20 since then. I don't understand the GE rally whatsoever. You know, and obviously we've had, I forget who it was on CNBC, major investor that said this was one of his biggest shorts because it doesn't make any sense to him at all. I don't get the pass for GE here. I don't like the stock whatsoever.
We'll see what happens if it does start getting a hit. And if we find a bounce today, like always, I think it's not going to be straight up, straight down. It's a market, right? We're going to get some volatility. We'll see what happens today. Dennis, you have a great one, my friend, and a great weekend. Hope you enjoy the Super Bowl. Who do you got? Who do you got? The Eagles?
You
going to watch it?
There's nobody stopping the Eagles.
No one's stopping the Eagles,
Sorry,
baby.
there's nobody stopping them. It's the Eagles. It's a cakewalk through the Super Bowl. They had obviously,
Hurts gets the MVP, holds up the MVP trophy. You know it. We'll see what happens.
It's the Eagles. Kramer's going to be happy. Monday morning, he's going to be ecstatic here because it's the Eagles. My buddy Phil, shout out to Phil, huge Eagles fan. He ain't stopping them.
We'll see what happens. Have a good one, Dennis. Take care, my friend. You guys can always keep up with Dennis Dick and everything he talks about at Triple D Trader. You guys go check it out. We'll see what happens in the Super Bowl. And don't miss on Sunday, Trading in the Zone. Guys, come on over to the book club. We keep growing and growing every single day. Always love to have more of you guys. And until we stop growing, we're going to keep pushing, baby. Let's go. Join that book club. We're starting up at 4 p.m. Eastern this Sunday, and it's exclusive only for the club members. They've been enjoying it. And definitely, I've heard multiple traders mention that they're bringing Trading in the Zone into their trading. That's what we're doing it for. At the end of the day, we're going to keep building up our skills on the book club. So definitely join us. And now to bring you over to live trading. Let's get to the action, right? If you guys want to see how I've been trading Tesla, talked about the swing trade yesterday on our new swing trade show. Don't know if you guys caught that. Start swing trading, and it will be going on all next week. We did it as an experiment to see if you guys wanted to talk about some swing trading action, and it was a hit. We had 2 big traders on. We're going to keep bringing on more traders like that towards the close. So I hope you guys enjoy and check out Start Swing Trading. All right, team, that's going to do it for me. I got to go pay attention to my Tesla position and see if I get stopped out in the natural gas. I don't know. That gas out there, it might get me. We'll see what happens, team. Come on over now to live trading. We got a lot for you today. Like always, right here on Benzinga.